Right. Hi, everyone. Welcome to today's IC Markets webinar, where we'll be talking about preparing for the earnings season, or more specifically for the US earnings season. All right. A little bit early. Let's just wait for everyone else to sign in as well. All right. Hi, Jonas. Hi, Serge. Just do take note that the Q&A chat window is open as well. The Q&A window is open as well as the chat window. I think please drop all your messages via the Q&A window. And I'd just like to make sure that all of you can hear me loud and clear, and you should be seeing uh, the cover slide of the presentation, which is IC Markets webinar preparing for earnings seasons. Just want to make sure you guys can hear me loud and clear, as well as view the screen as well. Otherwise, how have all of you been? It's been a pretty interesting week in markets, right? We've had very strong employment data last week in the US, and today as well, we've had the RBA, or the Reserve Bank of Australia, raising interest rates again, which caused Aussie dollar to spike earlier this morning. But yeah, we won't be looking through currencies or commodities today, because we will be looking at the US earnings season. All right, I'm just going to launch a poll as well, just to get an idea of uh, first timers. Just a quick poll to see how many of you are first timers, or you guys repeat attendees. All right. Okay. Hi, Hendrik. Welcome, Vincent, as well. All right. Just want to make sure you guys can hear me loud and clear. Okay. So, all right. So for some of you, this is your first. Oh, it's a mix. Okay. I would say roughly half. All right. Okay. Half of you first timers. Okay, just want to make sure. Okay, just letting all those who have just joined us know that the Q&A chat window is open. Please drop your questions over here, and do not hesitate to stop me at any point in time. All right. Okay. So, all right. Okay. So let's get things on the road. Okay, let's kick things off. Okay. So as usual, the disclaimer as well, this information is not directed at any residents in any country or jurisdiction where such distribution or use would be contrary to local law or regulation. And please take note of the risk warning that come with CFDs, as they are complex instruments would have a high risk of losing money rapidly due to leverage. All right. Also do take note that all the opinions and uh, um, comments that are made in this on the slides as well as during the webinar is purely for educational purposes and does not constitute investment advice. All right, let's go. Okay, so my name is Ketan Ramachandra. I'm an investment analyst at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for the best equity and FX research for the following years. I'm just going to pull up my laser pointer as well. Okay. Right. Okay. Here's the agenda for today. Just quickly go through the basics. Right. What is the U.S. earnings season? What should we watch out for? How do we trade them? And what are the resources that are available to help you conduct research as well? So these are all free resources that are available online. Okay. All right, so what is the US earnings season? It's a period where public listed companies in the US report their corporate earnings for the previous quarter. Okay, so earnings season typically begins 1 to 2 weeks after the last month of each quarter. So since we are in June, we're actually in the last month for the second quarter. So that means Q2 earnings will typically start from July onwards. So second week onwards or mid-July onwards, we will start to see Q2 earnings being released. Usually the big banks will start off first. We will see the likes of JP Morgan, Citigroup, Bank of America start kick off earnings seasons. And then usually 1 to 2 weeks after would be followed by big tech. So we would see Google, Meta, Nvidia, and so on and so forth. Okay, so just take note that reporting period. So here's an example. Okay, so the reporting period for Q1 or the first quarter would run from January to March. So this is where the companies will be. This is the period where companies will be totaling their total gross revenue and to determine their net income and other metrics as well. Okay, and then earning season for the first quarter will start in mid-April onwards. Okay, and then the reporting. Okay, so basically, uh, okay, and then reporting period for the second quarter Q2 runs from April to June, which is where we're currently in, and this earning season will start in mid-July onwards. Okay, so naturally this is a period in markets where it will be very active as all participants will be looking through the earnings reports and attending the conference calls as well. We have analysts, traders, investors all actively participating in the market. An earnings surprise or earnings miss can have a significant impact on the company's share price, right? Surprise means that they've beaten the forecast, revenue or EPS. Either one of them or both of them have beaten the original forecast. And miss means that these two metrics have come in below their forecast, right? And of course, it is also a period where we can have higher than usual trading volume around the earnings date. And just as important as the revenue and EPS metrics, forward guidance for the subsequent quarter is just as important, right? We'll go through this, touch on this in more detail as we move on below. All right. Okay, maybe before what we should start out for, I'll just like to highlight the earnings calendar. Where can we find the earnings calendar? For example, what I like to use is this Twitter account called Earnings Whispers. All right, so their handle is @ewhispers. Right, they give a good summary of all the earnings that are published, and they also have other related articles. And the good thing about them, they have a good calendar as well. So, for example, here, yes, okay. So usually they will update the calendar on the Sunday before the new trading week kicks off. Okay, so every Sunday they will drop the calendar if there's any news releases for that week. So in this example, so this calendar here shows not all of the companies, of course, but most of the companies that are reporting for this week, for the week of June 5th. So these companies are still reporting their Q1 earnings. Okay, they're still reporting their first quarter on earnings. So here we may not recognize most of the names because all the mega cap companies would have already announced their results. Like I mentioned earlier, the big banks are usually the first to kick off, followed by the big tech. So some names that might be familiar here could be Neo, DocuSign, GameStop, right? Just a few companies I just like to highlight. The good thing about this is it also tells you when, of course, on which date that the earnings are released, but they also tell you will it take place before the open or after the close, right? So that's quite important as well, right? So this is one of the free websites or accounts on Twitter that I like to use. Of course, feel free to search for any other resources that are able to produce such calendar as well, right? So this is just an easy reference, just a quick reference to understand what is coming up in the week ahead. And also, like before, they will also give a monthly calendar as well just before earnings season kicks off. So let me see if I can see it here for Q1. I think they would have done something pretty similar. Okay, no. Okay, but do take note, since Q2 earnings are going to start soon, they will come out with a monthly calendar as well so that you can see what is happening just before Q2 season starts, and then they will break it down into weekly calendar updates. I can't seem to find it here, but okay, doesn't matter. But yeah, I think you guys get the rough idea about this Twitter handle and how we can use it. Okay, let's just go back. Okay, so what should we watch out for? All right, the 3 key points to look out for would be earnings per share, EPS, revenue, and forward guidance for the following quarter. Okay, so EPS and revenue, these are the two main metrics. We will look at whether they have beaten the forecast, right? If either EPS or revenue beat the forecast, we call this an earnings surprise, EPS or revenue surprise. And if they fail to beat the forecast, it is called the miss. All right, and also the just as equally is the forward guidance, right? This forward guidance is usually discussed during the conference call, which takes place about roughly between 1 or 2 hours after the earnings results are released, or the press release is distributed into the media, right? So usually, whether it's before or after the market opens or closes, the press release is dropped first, which highlights the main points and also gives us the EPS and revenue data. And then the conference call usually takes place 1 to 2 hours after that. Okay, so this is important because forward guidance gives us insight into what the C-suite executives are looking out for in the subsequent quarter. So that means when we start earning seasons for the Q2 next month, they will be giving us insight into expected earnings and revenue for the third quarter. So if the forward guidance is optimistic or if they've raised any original forecast, then this signals or this identifies as a very positive catalyst for the share price of that company. So basically what the CFO or CEO are saying is that they expect revenue to increase, earnings to increase based on various factors. We could be increased sales for new product or services, or they've managed to streamline certain operations, which improves their net income, and so on and so forth. So this actually plays a big part as well. And sometimes we actually see share price react even more significantly during the conference call as well. And naturally, if the forward guidance is neutral or perhaps even negative, where they are painting a very bleak outlook for the next quarter, then naturally the share price is likely to drop. So there have also been instances where the earnings, when the press release goes public, we see EPS and revenue figures beat uh, the forecast, which sends the share price higher. But then when the conference call kicks in and the CEO and CFOs are discussing rather answering the analysts' questions and giving updates about the company's future projections, and if that turns out to be very negative, it's you can always see the share price reverse and start to go lower as well. All right, so that is why the forward guidance is just as important as the EPS and revenue metrics. Okay, so what is EPS? What is revenue? Okay, so EPS is basically the bottom line. Revenue is the top line. We'll come to that in a bit. Why do they call it the top line and bottom line? So EPS is basically the company's net profit divided by the number of outstanding common shares. Okay, it indicates how much money the company is generating for each individual share of stock. Okay, EPS is a useful metric because it tells us the profitability of the company itself, and also we can use it to compare this EPS metric with the with other companies in the same sector to identify which are the ones that are highly profitable and which are the ones that are not, right? So this gives us a good gauge as well, like an apple to apple comparison for companies in the same sector. So this is how we can use the earnings per share or EPS metric to compare companies as well. Of course, it is not the only metric you should use. There are various other metrics, but this is just one example. All right, revenue, which is top line, is the total amount of gross income that's generated from the sale of goods and or services for by that company, right, for that reporting quarter. So that's what it is. Revenue is just basically your total sales without before accounting for taxes, operation costs, and any other expenses. All right. So here we have an example of a consolidated income statement. Okay, so this is from NVIDIA. So as you can see, the revenue is always the first line on the income statement. So that is why it's called the top line. Then you have the latest reporting, earnings results for the reporting quarter, and usually they will have the previous year's data. So the income statement will also the first page usually will show the year-over-year improvements or growth in terms of revenue and EPS. And then the bottom line, which is what we call, which is what we call, yeah, net income or earnings per share is listed here. Okay, so you can see that on an annualized basis or year-over-year basis, revenue has actually fallen for NVIDIA, but earnings per share has actually increased, right? So net income or profitability has increased due to various business operations or steps taken by the company through the course of the year over the last 12 months. Okay, so uh, how do we access these income statements? Okay, so it's pretty simple. So right, we'll just go to Google. Okay, so you can just type the company's name or the ticker name if you're familiar with the ticker as well. You just have to type investor relations. So in this case, for NVIDIA, the ticker is NVDA. Okay, and then you just type investor relations. So investor relations is the key search word, and then the front is the company, right? Whatever you're looking for, you can type out the full name of the company or the ticker symbol or ticker name, and then just search that into Google, and it's always the first result that comes up. Okay, so this is how we go into NVIDIA investor relations page. So of course, each landing page for the investor relations will differ from company to company. This is how NVIDIA has done the layout, but typically you will have links for the press release, for the webcast, perhaps commentary may be differ across different companies. You will have, this is something which might be just something particular or specific for NVIDIA. Then you'll have the 10Q form as well. And then you have the presentation. So for example, if you click on the press release, it'll tell you the date of the release, the main points, and also the overall summary for that reporting quarter. Okay, so you will also have the comments by the CEO or perhaps even the CFO about certain key pieces of information they would like to put across. Okay, so here you will have the outlook as well. Second, this is basically this outlook refers to forward guidance. So you will also see it in here as well, briefly, but they'll generally go into more details during the conference call. That's when the CEO and CFO are usually asked very specific questions by the analysts, and that's where more insights are usually determined. Okay, so then of course for NVIDIA, they will break down their earnings into their various business segments: data center, gaming, visualization, automotive, and so on and so forth. So this is what a typical press release looks like. And if you go back, and generally they will also have the presentation as well. So if you click on presentation, you are able to look through all the various metrics: revenue, earnings, profit, where they are expanding their businesses, where is cost running higher as well, and of course the any new collaborations or any new product launches as well. So this is generally how um, the landing page for the investor relations for each company would generally look like. All right. Okay. Okay, just to take note, there's two reporting standards, right? When companies uh, build their income statement. So okay, so there's GAAP and non-GAAP. So GAAP basically stands for generally accepted accounting principles. Okay, it's basically a set of accounting rules or standards that most companies will use when completing their financial statements, right? So this is to make sure that they are complete, consistent, and comparable. And it also allows for apples to apples comparison between companies, and generally they are viewed to be more favorable by lenders and creditors. So basically what this means is if you have company A that has reported its earnings following the GAAP rules, and then you have another company B that's reporting earnings that's using a non-GAAP set of rules. You can't take those figures. Basically, you're not doing an apple to apple comparison, right? So basically, you might come to a conclusion that may not be actually correct. Okay, so when we are analyzing company earnings from the same sector, normally we do it for the same sector. You want to see how this company is performing to its peer or its big competitor. You would use it's important to use the same accounting guideline. So if company A is using GAAP and you want to compare the earnings with company B, we have to make sure that they are also reporting using the GAAP guidelines. Okay, now where do non-GAAP, or rather why do some companies uh, use a non-GAAP reporting standard? Okay, so this is because sometimes because of the accounting rules, the GAAP accounting rules, they're not flexible enough to capture the nuances of uh, that particular company's operations, and generally this applies more to SaaS companies. So SaaS companies are software as a service companies, right? So companies such as like CrowdStrike, Zoom, Salesforce. So these type of companies usually employ or use a non-GAAP guideline for their earnings statement. So when you're looking at companies in this sector, in the SaaS sector, you will generally have non-GAAP uh, earnings being reported. So then you can use this non-GAAP earnings of company A and compare it to company B to identify or yeah, to identify which companies are doing better in terms of revenue, business costs, and of course net profit and income. Right. Okay. Before I go into here, okay, another website that is useful as well is called FactSet. Okay, so if you just type FactSet into Google, right, it will generally be the first hit that you get. So it is actually a very good website where it gives you free resources into earnings as well as other segments as well, or topics. Okay, so if you click on insights, you can look at earnings, economics, energy, various other topics. But what we're going to look at is earnings. So you can click on earnings, and usually every week or so they will have free articles that they are releasing on their page. So the latest one is talking about analysts making smaller cuts than average to EPS estimates for companies in Q2. So what does this mean? Okay, so let's take a look. Okay, so basically it means that um, the change in earnings per share. So in the Q3, in the last two quarters of 2022, earnings EPS the changes were expected to be deeper, so they were cutting the EPS changes or expected EPS changes. But for Q2 of 2023, you can see that there's an improvement, right? It's actually, although it's still uh, negative, but it's actually improving. So what this tells us is generally we can expect better earnings from most companies in the S&P 500 uh, in for the next quarter. So we can expect companies generally to be uh, reporting better revenue and EPS figures, right? So, and also here, they've also broken it down into the various sectors. As we know, the S&P 500 is made up of companies in various sectors. We have, of course, communication services and information technology, which are related to the big tech companies. We have industrials, financials, consumer discretionary, real estate, utilities, healthcare, so on and so forth. So as we can see, the biggest changes, or the positive changes rather, in this case, are will be for the companies in the communication services and information technology sectors. Okay, so what this means is companies in this sector are very likely to report much better earnings and revenue in Q2. So this is potentially telling us that most tech companies, especially the mega cap, will be reporting good figures and are quite likely to beat their forecast as well. All right, so I'll leave you to look through this website in more detail. Right, you can feel free to read through it at any point in time, and you can always come back here to see any new updates that they are releasing on their web page. Okay, all right. Next is, okay, how do we trade them, right? So one of the ways that I mentioned was um, by looking at the fact set uh, uh, analyst reports as well, because they give us a good, generally they help us point us in the direction of where earnings could be expected to go. And also we also have to look at the previous quarter's earnings results. So for example, for Q2 uh, data, that's earnings that are coming up, it's very important to read through the Q1 earnings report, and especially the forward guidance segment, as well as um, the outlook as well, outlook segments as well, to get an idea of whether the company was projecting higher revenue and earnings for the second quarter, right? So that's why forward guidance is important. Okay, I just remembered something. Okay, let's just switch to trading view. Okay, so I'm just going to pull up NVIDIA as an example again. Okay, so in trading view, if you go on the daily chart, right, of course you'll see the price of the company, but at the bottom here, towards the bottom, you will also see E and D. Okay, E is earnings, so it's telling us the earnings report for that date and for that period as well, which quarter was it reporting for and which date was it released. And D is dependent, right? If the company uh, does have dividends, right, then we will see the dividends X date and how much what was the amount paid out to shareholders as well. So companies that don't pay dividends will naturally will not have this D symbol here on their charts, whereas companies that do will have, right? Okay, and also it's important to note that the E symbol, when it's in green, it usually means that at least one of the two metrics has surprised to the, or actually both metrics are surprised to the upside. And in this case, when the E is negative, sorry, when the E is red and is pointing downwards, right? The arrow is pointing downwards. It means that one of the metrics has actually failed to beat forecast. So TradingView helps us to give a quick snapshot of when earnings were reported for which reporting quarter, and whether the respective metric in terms of earnings and revenue, did they beat the forecast, and how much was the surprise, right? So in this case, when revenue of EPS of 1.32 came in higher than the estimate of $1.22. It was an earnings surprise, EPS surprise, and the surprise was by 7.7% margin, right? There's a margin of 7.7% to the upside. Similarly, for revenue, it was reported at $7.64 billion. Estimate was 7.42. So in dollar terms, it was about $222 million upside, with a 3%, and in percentage terms, 3% upside. So this is how we can look at these uh, uh, pieces of information and figure out whether it was an earnings surprise or miss very quickly, right? And here, yes, so he also tells you when it's a surprise, which metric failed to beat the forecast and by how much. Okay, there's something here. What is this? Okay, of course, I think you might be familiar with this. There's a headlines topic button as well. Okay, so uh, for NVIDIA, you can see, and other companies, you will see the earnings symbol here, so we can get a quick idea of where what was reported for that quarter, and whether the metrics, revenue and EPS metrics, did they beat forecast or not. All right. Okay, so we'll just quickly go back to the slides. All right, so as I mentioned, when it comes to earnings seasons and trying to trade earnings seasons, it's important to look at what um, had transpired in the previous quarter. So it's very important to look through the income statement, at least the press release. If not, uh, at the very least, you should at least look through the press release to understand what did the company report for that previous quarter, and what were they expecting, what were they projecting for the current reporting quarter that we are looking out for, right? At the very least, you should be looking at the press release statement, or perhaps even the presentation as well, to capture the main points. So when it comes to earnings seasons, you really it takes a lot more time, right? We have to look into the earnings report. You have to understand the nature of operation, or the nature of the business for that particular company. Is it a software company? Is it a goods company? Or is it a combination of hardware and software? Uh, where are they getting their uh, uh, what do you call it, raw materials from, or are they getting their parts from? Are there any key relevant supply chain partners? Uh, are there any major events going on? And also what's currently trending, right? So at the start of this year, AI has emerged very strongly, right? The theme of artificial intelligence, machine learning, deep data has come up very strongly in the first half of this year. And one of the big companies to benefit from a potential pickup in AI advances in technology is NVIDIA, right? Because they provide a lot of the gaming GPUs, GPU chipsets for gaming, and also now for mainframes and computers that require them for AI operations. So what was previous? Let's go back to the chart again. So previously in 2021, for most parts of 2021, especially in the last two quarters, or the last quarter, there's a big run up in Nvidia as well, because of the crypto, partly due to the crypto boom as well, because Nvidia GPUs were being used by data miners for Bitcoin mining operations, right? So when it was actually came to a point where secondhand Nvidia GPU uh, chipsets or cards were more expensive than brand new ones, basically because there was not enough brand new supply coming into the market. So Bitcoin miners, a lot of them were looking into the second-hand market and trying to buy uh, the chipsets of like probably retail users as well, right? Just general uh, ordinary PC users. So this is why there was a huge increase in the share price of Nvidia, of course, because they had huge sales going up during this period. There's high demand for their products, which caused it to go up due to the big demand for mining, data mining operations for crypto. But after that, it all went down sideways, partly due to uh, inflation rising as well, and crypto market going into with the FTX fallout as well. Plus, we also had high energy costs, inflation picking up in 2022, which made mining a relatively expensive operation to run as well. So demand from that area also pulled back. Plus, of course, we had the FTX fallout over this period as well, which cast a very negative outlook or perception on the crypto space, which generally meant that there was less demand for NVIDIA products. And similarly, at the start of 2023, earlier this year. This is when AI really started picking up, coming to the forefront, and demand for their products, NVIDIA products again, uh, has caused their share price to surge higher, right? So this is how we can be aware. That's why it's important to be aware of themes that are running in the market. Generally, you wouldn't associate crypto mining with NVIDIA, but it's important to take note of that, because sometimes something that may seem completely irrelevant to that company may actually be its biggest market as well, right? So this is how just like to use NVIDIA as a good example, because it tells us various themes or that are playing out in the market, right? We had big crypto hype around this period, Bitcoin mining, or not only Bitcoin, but just the crypto mining in general was at its peak around this period, which signified big demand for NVIDIA products, and naturally that causes the price to go up. When you have strong fundamentals, right? Earnings and revenue go up, pushes share price up. Then you have the fallout from FTX, less demand for its products as mining operations slow down due to various factors like FTX fallout, poor perception about the crypto space, higher energy costs for households and industrials as inflation ticked higher in 2022 as well. So this is how this is why I like to use NVIDIA as one of the recent examples to identify trends and see how um, they benefit certain companies. All right, and then also with relation to that, like okay, like Apple just had its worldwide developer conference. I think recently this week, yesterday. So it's also important to note which companies are announcing major events, and are they launching new products or services that may be um, very likely to boost potential sales in the next 1 or 2 quarters. And also, like again, it's also important to look at like the uh, secondary uh, second order companies that related to the company that you're looking to trade. Like for example, in the case of Apple, Foxconn is its biggest supplier, right, in terms of supply chain companies. So if they are reporting disruptions at their factory, or they are reporting uh, increased demand for certain orders from Apple itself, then it signifies that naturally that Apple is going to sell a lot more products for the subsequent quarters. And also another thing I like to look at is also like commodity prices as well. So just look in your daily around you in your daily life, whether your grocery items are going up, pump prices, are they going up, right? If that's going up, then for example pump prices, then that would mean that generally downstream oil companies should be making should be reporting higher revenue as well, right? So for example, with relation in regards to oil companies, like, so if you just look, so when you see your gas prices going up, so you should search for downstream oil companies, right? Downstream oil companies would mean that they're companies that are taking the refined product and distributing it, and this is in terms of petrol station companies. So of course, a lot of these companies here, like Shell, BP, and Saudi Aramco, they are also upstream companies as well. So they're involved in the full cycle of the product, right, from upstream to refining and finally to downstream as well, right? And then also for these companies, you can also look at Gas Buddy. So for example, a good website. All right, so it's a free website that tracks the price, the average price of the retail gas price in the US, or in this case in other countries we may call it petrol, right? So if you are aware of how gas prices or petrol prices are rising in the US, right, particularly last year when inflation was picking up, so you can see gas prices going from as low as $3.24 per gallon to as high as $5 per gallon. Then this should be telling us that a lot of these companies, that are involved in this space are going to benefit from it, right? So when you see it especially spike up very sharply here, that would mean that potentially we have a lot of companies like Shell, BP, and those who have retail gas pump operating retail gas pumps likely to benefit from this increase in price as well. So this is just generally how we can try to be aware of things that are around us and see how we can go. It's like also grocery items. If grocery items are picking up your daily items that you buy, milk products, food, and whatnot, it could be that companies involved in this, like big grocers, are likely to report good and strong earnings as well. Maybe companies like Pepsi and Coca-Cola, especially Pepsi as well, because they're not only selling drinks, but they also have a lot of wide range of snack products. So you could see that uh, reflect in their sales as well. So it's just part of it is being interested in that company or that area that you like. If you like tech, follow your favorite companies, see what they are doing, what are they buying, what products or services are they launching, what are the relevant companies surrounding that sector, which are the relevant supply chain companies that are going to actually make an impact uh, uh, to their operations and sales as well. Okay, so right. Okay, so we have okay, if there are any questions, please let me know. I mean, do drop me any questions along the way if you guys have anything to mention. And as you can see, right, so NVIDIA, for example, okay, good thing about TradingView, it also tells us when the date is, when it's being released. But also what's more important also, if like, let's just see if we type Microsoft, right? Let's see when their upcoming Q2 earnings is scheduled for, right? Okay, so we go in Microsoft Investor Relations page, right? Okay, so this is, they had their earnings, the latest past earnings in April 25th. Okay, so okay, just do take note. Sometimes the financial year reporting, fiscal year reporting is a bit different across the companies, but they are just reporting for that period, which was January to March of 2023, right? The headlines may vary across companies, like as we saw for NVIDIA, they were reporting their first quarter fiscal 2024, which actually was reporting earnings from January to March of this year, whereas Microsoft had it labeled as fiscal year 23 Q3 earnings. Okay, this is just basically their calendar is a little bit different as per their reporting calendar, but the period of reporting is the same. So they're all tracking earnings and revenue from January to March of this year. Okay, so when is the next event coming up, right? Okay, so how do we search for that? Generally, it should be here. Okay, wait, is there? Okay, let's just go here. Okay, earnings and financials. It should be here generally. No, I want to see. Okay, wait. It should up. Normally, it's in upcoming events, but we don't see it here. Ah, okay. Okay, so okay, the reason it's not out here on the website is because they have not released it yet. Okay, so when you come to the investor relations page, they will also let us know when the next earnings will be released. Okay, so maybe let's just look for another company which may be may have it already uploaded. So let's just check JPM, JP Morgan, investor relations, because the banks usually announce their earnings first. So let's see if they have it uh, already up. Is it here? Me? No. Okay, sorry, here we go. Right, sorry, you don't even need to click on anything. Just need to scroll to the bottom, look for the area events and presentations. Okay, so JP Morgan will be reporting their second quarter earnings on July 14th at 8:30 a.m. Eastern Time. Okay, so they are announcing. The banks usually always drop their earnings before the market opens, and the conference call usually is about 1 to 2 hours after. Right, so this is where they will at 8:30 a.m. when the revenue and earnings are released and the press statement is also released. So that is where you will see a lot of pre-market activity as well, right? Pre-market in America will start at 8:30 a.m. Eastern time, and equity markets open at 9:30 a.m. Eastern time. So it's important to take note of when they are released as well, because sometimes it's not always fixed. The timing is never fixed. It could be 8 a.m. Sometimes it could be even as early as 7:30 a.m. Eastern time. So do take note of the timings, because especially if you want to ride the earnings play, sometimes people or traders generally wait for the earnings to be released and then enter in pre-market, or sometimes they will enter before the earnings are released, right? It depends on what strategy you have in place. So if you just click on this, it will tell you when they are expecting uh, the date. Okay. Okay. So see, it's even earlier, right? Okay, this is actually the timing of the conference call, right? Okay, so see, this is the conference call. So second quarter results. The conference call for the second quarter results will start at 8:30 a.m. and the press statement will be released at approximately 6:45 a.m. Eastern time. See, it's actually way before even markets open or even pre-market activity starts. All right, so do take note of that. So each company on their investor relations page will provide the information as to when they are announcing their results, whether it's pre-market or after the market close, and when they will start their conference call as well. All right. And okay, so this is how you can find out such information as well. And okay, I will also just go to the last page here, resources. Yeah, if you guys want to take a snapshot of this, basically, this is the Earnings Whispers website. You can go and see their calendar. This is the Twitter account of Earnings Whispers, where they have a better infographic for their calendar. Then we have the facts website for FactSet as well, where you can find out, keep up to date with the latest earnings analysis and reports. And also FinWiz is also a good website, free website for screening stocks as well. Okay, so let's just look at that. So if I go back to my browser, I go back to FinWiz. Okay, if I just search for FinWiz, right? Generally, this will be one of the first ones to come up, the first results. So you click on Stock Screener. Okay, so this taken me here. Okay, so just click on Screener, right? And you have descriptive, fundamental, technical, right? So let's just go through the basics. Okay, so I want to look for a company that's in the Nasdaq. Maybe I'm looking for tech companies. Okay, so this is how you can screen. Market cap. So if you want mega cap, large, mid cap, so you can look for mega cap, right? Then there's various parameters that you like. You can search for. Okay, these are descriptive. Okay, and then for example, for fundamental, you can also look at companies that are having low price to earnings ratio. Maybe you're looking for mega cap companies that have a low price to equity ratio. As okay, wait, let me see if I remember something. Okay, let me see if I can find a screening criteria. I think yeah, it's quite important to have a decent screening parameters as well. Let me find one here and try and give you an example. Okay, I remember what is it? Just give me a minute. me find this for you. This would be quite useful as well. Okay, good. Why is it not loading? Okay. Okay, where is it? Okay. So, okay. Basically, Peter Lynch is a is a famous hedge fund manager previously. I think he's retired now. But this is the screen criteria that he uses to identify potential companies that may have very high growth in the future. So he looks for companies with a market cap of less than 1.5 billion. Okay, this is in pounds. I think it generally, if I'm not mistaken, this should be in dollars as well. Then also you would like to have EPS growth more than 15% or between 15 to 30%. PEG is PEG ratio, right? So these are some criteria. You don't have to look just at Peter Lynch's screening criteria. There are many criteria that you can look at. If you just type screen criteria for stocks, you'll find a couple of well, not couple. You'll find more than a handful of screening filters or criteria that would match the what you're looking for. So in this case, he uses this to find to screen for growth companies, and then by using those inputs, you can that criteria, you can input them into here. So you've got various categories, as I said, PE, forward PE, PEG is here, which is price to earnings growth. You also have price to sales as well. And then from there, you're able to identify various companies that could have potential growth in the future, right? But of course, you have to overlay this um, with what the overall market is doing. So let's just end off with where the S&P end of today's webinar uh, with where the S&P 500 is currently trading. Okay. All right. Thank you, Hendrik, uh, for the good word, kind words. All right. Okay. While we before we end, I'm just going to launch the poll as well. So this is just the poll to rate today's webinar. And so do take note, after we end the webinar, there'll be a survey as well. So please, we look forward to your feedback as well, because it always helps us to improve not only this webinar, but also help us to prepare for better other webinars or topics that you would like us to cover in the future as well. All right. Okay. So this is the S&P 500 index. I'm on the daily chart. What I like to do, what indicators I like to use when I'm doing to do technical analysis on the index is Bollinger Band, stochastics, and for S&P 500, I like to overlay it with the VIX as well. The VIX is the volatility index, okay, which measures implied volatility based on the options market. All right, so the ticker for the S&P 500 index is SPX, and for VIX, you just type VIX. Okay, so all this is in TradingView. You can do the dual screen split and then try and see how everything lines up. So I've set up my crosshairs to be aligned as well. Okay, so just let me okay. Right, okay, sorry. Right, oh, oops, sorry. Okay, so okay, this is the daily chart. So as you can see, VIX has fallen pretty low. So as you can see, last week or 2 weeks ago, we had VIX going up higher, partly due to the US debt ceiling limit, right? There was fears that the Republicans and Democrats would not come to an agreement to raise the debt ceiling limit because it needs to go through the House, through the Senate, and finally, once the Congress has approved it, it landed on President Joe Biden's desk, where he officially signed off on the bill. So that is why we've seen volatility or the VIX index rise over the last couple of weeks, and then starting to fall because the bill was officially signed over the weekend, right? On Saturday or Sunday, I believe, President Biden signed the bill, which paved the way for the US to suspend its debt limit, which means that it avoided a default. So that is why volatility is dropping, and generally it means that equity markets are rising as well. So what I like to point out here, just to get a sense of where the overall S&P 500 market is trading, over the last 12 to 18 months, generally when the VIX has crossed above 30 or gone higher than 30, it usually has resulted in potential market bottoms, right? And also that's about the same time when the index is also trading close to the lower bound of the Bollinger Band. And we also see stochastics being in a relatively oversold position area, right? So below 20 generally, below 20 to 15 generally, stochastics would indicate that uh, this security is potentially oversold, right? So this is how you can use. Of course, you are free to use any other indicators that you understand and that help you to figure out uh, market of identify potential market bottoms or market tops. But in this case, I like to overlay the S&P 500 with the VIX, and as you can see, since January last year, whenever the VIX has gone above 30, it has usually resulted in the market bottom or close to a market bottom. And that's also the period where you can see that, okay, I've got my crosshairs all aligned. You can see that stochastics generally drop as well. They're close to oversold territory or in oversold territory. And also the price S&P 500 index, the index level is pushing against the lower bound of the Bollinger Band as well. So this is something that this is a set of, I guess, parameters that help to identify potential market bottoms in S&P 500 for the last 18 months. And you can see that this is a period where generally we expect a short-term bounce in the S&P 500 as well. So this means that the index is rising. So naturally, if the index is rising, most of the components in that index would rise. And since it's a weighted index, that means the mega cap and large cap companies will be driving the index higher. So the share price of those companies are very likely to be rising as well. So as you can see here, in January of last year, towards the end of January last year, VIX went above 30, stochastic close to oversold, price pushing against the lower bound of the Bollinger Band, and S&P 500 reversed for a short-term bounce. Similarly, in March as well, March and February to mid-March, you could say there's a double bottom here, with VIX staying elevated, generally being elevated before price rebounding higher. Of course, it's not always 100%. Like here, we can see in April and early May, where VIX stayed above 30 for most parts, but price still kept pulling back before finally bouncing higher in May. So this is how we can use. So far, this has worked quite well, right? Just because this worked over the last 18 months doesn't mean it's going to work for the next 18 months, right? So it's always important to be nimble and to be aware when certain indicators or certain approaches do not or fail to work in the future. So what has worked in the past may not necessarily work in the future. So it's important to take note of that. So again, similarly in October, when we saw a lot of the uh, individual share price of companies bottom, we saw the major indices like the Nasdaq and S&P 100, S&P 500 bottom as well. You can see that VIX was elevated above 30. Uh, you could say the S&P 500 formed a double bottom as well here before finally pushing higher to go towards 4,100. And recently, you could also argue that there was okay, the next resistance level, probably 4,300 will be the next major resistance level. And also previously in the past, this area was also range bounding, right? So once equity markets bottomed in about October, you could say that generally speaking, the S&P 500 was ranging between what is this 3,800 and about 4,200. Now it has broken out of it over the last few over the last few days, right? So this is currently where equity markets are, and with the debt ceiling being resolved, there's some uncertainty removed out of the market, so we could see equity markets push higher. But again, it all comes up to earning season, right? So we are earning seasons for Q2 starting in July. So yeah, do take note of that. And it's for equities and the earnings play, it's actually quite important to thoroughly understand what the company is doing in terms of its business and operations, and what is the expected future growth by looking at past uh, earnings reports, and also trying to understand the sector it is in. So it takes a bit more time, a bit more effort to find out more about that particular company and sector before we can do like an earnings play as well. All right. Okay, so I've come to the end of today's webinar. Right. Thank you all for your time. Right. And yeah, we look forward to the next one. All right. Take care, everyone. Have a good end to the trading week. Right. Thank you.